everybody, welcome back to episode 25 of the Back to Basics series, where my fiance Michael is teaching me how to trade. Today we are looking at the Trade Ideas back tester, where we just went over some statistics. This is kind of the next step. We have a full playlist back to the first episode, which is what is a stock, if you want to click back and kind of follow along.
So this is more of, again, just time for practice, right? We did all of our theories. You're starting to use Trade Ideas a little bit. I've set up a layout. You're playing around very, very little bit using one window type. So the first thing I need to introduce
Placing some paper trades,
Yeah.
and I made $600 in my first week.
Well,
I'm so pumped.
now you have to show the people
I will.
That's the second video you bragged about it.
I'm so excited.
So before essentially, and this I think is a better way to teach you Trade Ideas, I gave you a couple of these windows that just list a bunch of stocks based off the criteria you're interested in, which that was short float for you, right? That's one type of window that Trade Ideas has, and it's called a top list. And think of it kind of like an Excel spreadsheet that it shows you every stock in the market, and then you can sort it so that it's ranking certain stocks higher, and then you can filter out things. So kind of like any sort of a spreadsheet or database type program, right? It's saying this, for example, that we're looking at here is just a bunch of indices. So I showed you that I go through this every night, right? This is oil, this is China internet, right? So these are indices, but what I've done is I've said, hey, Trade Ideas, take the entire market that's out there, now filter out everything that's not an index, and then sort it, and I sort it by the position in 5 days range. So whatever's in the highest part of its 5-day range.
Let's start back at the beginning with that one.
Okay. So there are two types of windows in Trade Ideas. One's a top list. Everything that you've looked at so far is a top list.
What is on a top list?
Well, whatever you want. So you have these. You have this one, for example.
Okay.
Right? So what this one is that I gave to you is basically going to Trade Ideas and saying, okay, I know that there's about, I think, 4,000 tradable securities on the US stock market. So what you're doing is saying, instead of showing me all those 4,000, I built this for you that says, only show me the ones with the highest short interest.
Okay.
Right? So it's taken all of the instruments out there, and it's removed anything that doesn't have a high short float. So now you've gone from 4,000 instruments to maybe a couple hundred.
Okay.
And then I said sort that so that the ones with the highest short float is on top. Right? So Match Group has a 91% short float, and it's on the top of the list because it's the highest out there under this list. Make sense?
I think so.
So what happens is
But you can make your top list according to whatever you want to.
Whatever you want.
Okay.
This is just the one I made for you because you were interested in short float. But yeah, whatever you want. You can do it on fundamental stuff that we've done it. We can do it on technical stuff, statistical stuff, how many people are talking about on Twitter,
Okay.
Whatever you want. Now, what happens is
if you wanted access to all of the trades out there, could you have it?
Oh yeah, you could just go through every stock in the market if you want it. It would. I don't see why you ever would. A lot of them are just untradeable because of volume, which we talked about. So I went through here, right click, I can show you. So you can right click, configure, and you can add or remove any of these. Each of these is a different filter, and you can add or remove any single one.
Okay.
So you can see that there's almost an unlimited amount of combinations of things. But on your particular list, what I wanted was stocks that were had enough volume that I deemed them that they'd be tradable for you. Close to a 10-day moving average, which basically means that they're not up an insane amount in 10 days and they're not down an insane amount in 10 days.
Okay.
Because we're pattern traders, so we want to wait for a pattern to develop, and then we hope it goes up an insane amount in 10 days or down, right?
Okay.
Whereas a revision to the mean trader may say, I want it to have gone crazy in the last 5 days because I'm looking to short the thing that spiked up higher, right? So again, whatever you want. And then I just said price, I don't want to trade anything under $1, and I don't want to trade anything over 500. So you can see how this screen filters out all of those 5,000 stocks into just a few hundred, right? And then what I've done is I've sorted it, and you can sort it by kind of anything here, but I've sorted it by short float. You could short it by how much volume it did that day, or what the price was, or whether it was up or down big on the day, whatever it is that you want. But again, that's a top list. So that what happens is every 30 seconds that gets resorted. So every 30 seconds, the system goes to the server and says, okay, take that spreadsheet essentially that you made and resort it. Right? Is there anything that didn't meet the criteria 30 seconds ago that now meet the criteria? Right? And these are great for scanning the market, which you see me, I go through each of these every night just to see what's going on with the market. But the second type of window is what we call an alert window. And what this does, it filters out the same way the other one did, right? The same exact way where I can say, don't show me stocks that have low volume. Don't show me stocks that are under $1, right? Don't show me stocks that are, have been up an insane amount or down an insane amount at any given time, right? And then it adds a feature that says, okay, now only show me that stock when something happens.
Okay.
Right? So instead of every 30 seconds, show me all of the stocks that meet that criteria and rank them, show me absolutely nothing until all of those filters are met and something happens. So for example, this particular something is a stock hitting a new low. So if I click on this and I go into, you can see I own some of this. If I go into an intraday chart, so each of these candles are 15 minutes, it alerted to me right here on this blue arrow. And that's when all of the filters were met and the stock was making a new low.
Okay.
Right? So as the day goes by, this window starts blank. And as the things that I want to see occur, they start to pop into this window. Right?
But you could potentially not have any of the things occur, right?
Yep.
Okay.
100%. 100%. The reason that is important is because that's the premise that we're going to start the back test with, which basically says, when this event occurs, I want to simulate as if you bought that stock, held it for however long you want to hold it for, minutes, hours, days, weeks, months, right? And then I want you to sell it later, and I want you to have a stop loss in, and you can put in a profit target or whatever you want, and Trade Ideas will go back, and every time a stock would have met the criteria of this window, it simulates that trade, and then it tracks the price until the end of the trade. It says you would have made money, you would have lost money, you would have got stopped out, whatever. And that is the premise of the back test.
Right.
So this particular one, let's go back to the daily chart. This particular strategy is essentially looking for, I'll show people, but it is a bit complex, but it uses a linear regression algorithm. You don't even know what that is, but it's basically just saying, I don't know if you remember this from high school at all, but it's your line of best fit. You remember hearing that? They scattered a bunch of data around and they said, draw a line that kind of goes through the center of that data the best, right? So if I go and I say each of these is the closing price of a stock like this, it seems like random data, but the line of best fit would be something like that.
I'll take your word for it.
Anyway, so basically this is a way for me saying that I want the stock, I want that line of best fit to be pointed pretty upwards. So I want the stock to initially be in a pretty big uptrend, and then I want it to kind of pull back quickly and dramatically. And I'm going to look to buy it there and hold it for a couple days, hoping that it's just a pullback in an already existing trend. Again, you don't need to know how to do any of this yet, just the general concepts that exist, right?
Okay.
So the moral of the story is I went into the system and I said, okay, what if, right? I had an idea, I saw a podcast, I read a book, I watched a YouTube video, whatever it came. And the guy said, this is the way I trade and it makes money. And I go, okay. Or, an idea that came off the top of my head. And I say, okay, let me test that. And I can go into the system and say, what would happen if every time that situation occurred over the last 3 months, I had bought the stock, I had held it, all of the information's here. So I want to initiate trades anytime throughout the day. Basically, I put if I didn't want to trade in the afternoon, I could move the slider there and it would stop trading at the afternoon. I want to hold it for 2 days. So tomorrow plus 2 days, so 3 days. I want to risk one average true range of the stock, which basically just says, okay, this stock moves on average $1 every day. That's what I'm going to risk. And that's it. So I'm going to buy the first time every stock enters this window. I'm going to hold it for 2 days with a stop in place so that if I'm wrong, I protect my risk. And then I'm going to get out after 2 days. And when I click simulate buy, it goes back, and this may take a bit. So I have
How far does it go back?
Goes back currently 3 months.
Okay.
Right, and we're working to...
Can you change that if you wanted to?
You can go less. We're working to make it go longer. The problem is it's an insane amount of data. Insane amount of data. Whereas that's why in the other one I showed you there was that single stock back test. That would be super easy to go back like 10 years because you're only looking at one instrument. Right. If you're looking at everything, then it becomes incredibly, incredibly difficult. You can see, if you remember from the other one, that this is kind of what I showed last time, right? So I can look at this strategy. This part right here actually shows me my equity curve. So that it worked great for a period of time here. It worked a little bit okay here, and then we had a little bit of a pullback, and maybe it's pointing back up. And this is my equity. So if I started with $50,000, that's what it would have looked like, right? That $50,000 would have gone up to 128 and then back to 100, and now it might be going up again. And now I couldn't trade this strategy with $50,000. That's what this red number here is saying, that I would need $700,000 in order to trade this. So
it's buck change. Well,
it's account value, right? That's not crazy when you're talking about account values. But more importantly, here's all the data. So it's 57% accurate. It makes $2.21 when it's right, and it loses $1.50 thereabout when it's wrong. And the profit factor we talked about is 1.86. Again, the point of this was to show you that you can go in the system, and again, I don't expect you to do this anytime soon, but you can go into the system if you have an idea and test it to say, okay, is this something I'd want to trade? Now, right like this, the way it is, it's profitable, right? But that doesn't mean I need to, and this is where people make the jump and they say, well, I'm just going to plug that into a computer and trade it. But what if I used my trading eye and everything I'm teaching you to make this even better? So I know now, the main thing that I've learned from this is that if a symbol comes through this list, that there is a 57% chance that this is higher over the next 3 days before it's lower. So what I can do is now sit back during the trading day, and this is basically what I do now, is I watch these come in, and I say, okay, MNTA, I'm not really interested in MNTA. It doesn't meet the technical criteria I'd want. Okay, well, pizza. Well, let me take a look. It's Papa John's. We got a little bear flag going on here, possible inverse head and shoulders maybe forming. We got a 16% short float, right? All of the kind of checklist stuff that we went through. But where I have started is I've started in a place where there is that statistical edge, right? So that's the main power, the main benefit, and what I want to show you from how people use statistics to demystify it. A lot of people say, oh no, it's a bunch of quants hammering away to build something to say, okay, now trade for me and go walk away and never look at it again. But that's not what I do. There are some people that do that, and that's not what I recommend. What I recommend is that you build something like this, and now I can just watch this all day, and as tickers come through, I can just click on them and make my own decision of whether or not that this is a trade that I'd be interested in, right? So you can see how everything is, I've been teaching you stacks and fits together, right? First, the technicals. You need to know all of the technicals. Then you need to know the fundamental data to make sure that you're not doing anything crazy. And then we're going to set you up with some statistically relevant scans. And then the hope is by combining all this information, you develop a trading plan that says, I am going to look at these 4 windows or whatever it is that give me an edge, statistical edge. I'm going to then filter them through my technical eye to see if there's some sort of a setup that I'd be interested in trading. Then I'm going to make sure the fundamentals make sense. And then if all of those line up, I'm going to make a trade. And then what happens is, instead of being inundated with what the hell do I do, when you sit down every day, you have this checklist. Wait for this to tell me to do something, then do this, then do this, then do this. Then the other thing you can do is I went back and I looked at the history. If you don't want to be there during the trading day, I still know that something like IPI has a better chance, and it triggered on this day right here, so it already would have been a good trade. But I know that over the next 3 days, it has a better chance than not to be higher. So you can just sit down at the end of the day and scan this whole list of stocks. Make sense?
I think so.
You understand why we're doing it now? That it's not
Yes.
that we're trying to turn you into a quant or anything. It's just another tool that kind of sits along all the other tools. So that is it for this week, guys. Again, next week we're going to go over all of those cognitive biases and then continue on to for statistical analysis, and we are going to then build a trading plan for you, and then you're going to get after it.
Uh-huh.
And in the meantime, I think you're going to make some videos for the people.
I am.
You are. All right, cool. Okay, guys, that's it for this week. Talk to you guys next time.